Hello and welcome to Camel Finance. I'm your boy Camel, and today I just have two short messages. One about banks. I want to show you where we are in the current cycle. Then I want to remind you that Bitcoin is the exit and show you a couple of interesting developments regarding Bitcoin. And then we're going to spend the majority of today's episode going through the charts, making sure I've shown you everything I can see, ready for the week ahead. Looks to me like we found a cycle low for the stock market, and it looks to me like Bitcoin is getting ready to do Bitcoin things. So that's primarily where the focus is going to be for me this week. I'll show you all of my positions that I've got open. I'll show you everywhere I'm looking to add positions. I'll show you where the invalidation comes for all of these trades, and overall just how I'm going to be dealing with the markets as a pro swing trader this week. So in the meantime, sit back, relax, hit that like button, and let's get into this. Got a really nice typical timeline here of banking crisis from Raoul Paul, and I wanted to show you this and then show you exactly where we are. So it starts with just one bad apple, right? We see one bank blow up and we go, oh, that's unlucky. And then it becomes, well, maybe actually it's just a few banks. Then they come out and tell us the banks remain strong. Then they blame the evil short sellers and say they're considering banning them. Oh, it seems that didn't work. Let's cut rates. That didn't work either. Panic ensues. Then they change the regulations to stop capital flight before the monetary bazooka comes out and puts all the dead assets onto the central bank balance sheet. Enjoy. So where are we today? Well, we can certainly tick this one off, right? We have seen one bank blow up, and then just weeks later, we saw a few more. They come out and tell us the banks remain strong. And of course, we've seen this recently. The US Treasury continuously says things like the US banking system has substantial liquidity and deposit flows are stable, which of course could not be further from the truth. We're now at this stage where it says it's the evil short sellers we're considering a ban, and that's what you can see. Short selling is currently coming under fire as regional banks sell off. Should the US banks ban short selling? So we're right around this level here, aren't we? We are right around the point where they start to rig the game and rig the system in their favor, only for us to find out shortly thereafter that that's not going to work either. Of course it's not going to work, because the problem is of course not the short sellers. The problem is the fact that all of these banks are insolvent. Remember the 3 rules of banking that only the crypto guys know? Number 1, it's not your money. Number 2, the money's not there. And number 3, it's not real money. We also know that cutting rates is likely just around the corner, and I can show you that here. This is the target probabilities for the Fed funds rate looking out to June. You can see currently a 91.5% chance that they are going to move to pausing rate hikes as of the June's meeting. And if I click out to July, you can see that there's a 60%-ish chance that we'll have paused rates by then, and over 36% chance that they would have started cutting rates by as early as July. As always, cutting rates doesn't work. Panic ensues, and this is where I believe, as I've had this melt-up chart marks for some time, do they cut rates at the top? Is that what catalyzes the plunge in risk? Is that what causes the sell-off? I would think so. Every now and again, somebody asks me, but Camel, isn't cutting rates bullish for stocks? And the answer is no. The pause, the pivot from hiking rates to a pause in rate hikes is historically very bullish for stocks. But when they start to cut rates, that is the signal to exit the market, or at least it always has been historically. If you take a look at this video here, answering your questions, and you can see the thumbnail, it says at the top in yellow, rate cuts are bearish. So I've done extensive work in this video. If you want to go and have a look at that, then feel free. That's the video you need to see. And it shows you all the differences between rate hikes, rate pauses, and rate cuts, and how they impact risk assets. So everything you need to know about rates is in that video if you're not already familiar. So of course, once they've cut rates, that won't work. Panic will ensue. We'll likely see stocks dive off of a cliff before the final bits where they start to change the rules to rig the system, and then of course print a boatload of money, only to then use that freshly printed money to buy up all the assets for pennies on the dollar and add them to the central bank balance sheet. And this is why I'm so confident that whilst the CPI is coming down, whilst inflation is coming down in the short term, keep in mind they've already started printing, they've already started to re-expand the balance sheets again. So whilst I expect CPI to continue to fall down, just like we saw in the 40s, remember all this printing lags by 12 to 18 months. And this is why I firmly believe that even though we're in a place of declining inflation at this current moment in time, they've already started printing 12 to 18 months time. That money, that freshly printed balance sheet expansion, that bazooka of QE will start to make its way into the real world economy and into the lives of each and every one of us. And we will see another spike in inflation just like we had in the 40s or in the 70s. So as I'm sure you're already aware, Bitcoin, physical gold, physical silver are the exit. But I wanted to point this out. I know I've shown this a bunch of times, but there's an interesting update and development in terms of Bitcoin. So in Argentina, they have experienced a currency crisis. Their current rate of inflation is over 100%. And Bitcoin has proven itself to be the exit in Argentina. As you can see, Bitcoin continues to make fresh all-time highs against the Argentine peso. But as a recent turn of events and a new update to this whole story, Argentina has just banned purchasing Bitcoin through payment apps. Remember, their inflation is currently 104%. So they need Bitcoin more than ever, but they're not allowed to use it. And I wanted to make several points here. First of all, it's super important that you get out of the system, you exit the system, and you get your allocation to Bitcoin ahead of time. It is no good waiting for the currency to collapse and all of your money in your bank to either be lost or stolen or inflated to near worthless, and then try to opt out of the system and go to Bitcoin. It's also very interesting that notice how they start to ban Bitcoin and it does not tank the price. You know, a lot of people say, yeah, well, they'll just ban it, then what? Well, guess what? They've banned all sorts of things like drugs, and all of that stuff is very, very prevalent everywhere in society, as I'm sure you're well aware. Banning something does not mean you can't use it. This is a permissionless peer-to-peer system, and Bitcoin is proving itself to truly be the exit in Argentina. So make sure you opt out of the system. Make sure you do it before the stuff hits the fan. Make sure you withdraw your Bitcoin to a cold wallet. Okay, make sure you bear this asset yourself. It's no good having it on an exchange in case the government suddenly forces the hand of the exchange and tells them they can't give you your Bitcoin or they have to confiscate it from you. Remember, Bitcoin is only unconfiscatable if you own it on a cold wallet. So with all that said, Bitcoin is the exit, so is physical gold and physical silver. Let's move into the charts. Germany's DAX index is about to break out to new all-time highs on deteriorating economic data. So the bad news is good news, and there's a reason for this, and it's simple. QE is coming. Like I've been saying all the way through this episode so far, the printer is coming. They are going to print more money, and they are, as Raoul Paul points out, going to use that monetary bazooka to buy up all the assets and add them to the central bank balance sheet. If you've been following this channel, following the videos, what you will have noticed is that I said the S&P undercut had likely shown up on Thursday's session. We had just come out and undercut that low. I said, now it's time to look for a swing. Only for yesterday, I posted and said, it looks like the swing is here. So you can see we've got this swing low pattern. We've got a first drive down, a middle drive, and then a gap up and go. This looks to me like we've possibly found a day 37 cycle low. Now, it does not preclude a move lower that undercuts this low or forms a triple bottom before going. Everything and anything is on the table, of course, because it's a market. But given the price action that we saw, given that this low occurred inside of the timing band, I would say it's a good chance we've found the cycle lows. So let me jump into some charts and I'll show you what I mean. So here's the S&P 500. You can see if I grab this low here and I measure out, you can see that this made a 37-day low. So it's a 40-day cycle for the S&P, plus or minus 4 days, perfectly within the timing band. We also had an undercut, but it was more of a double bottom, as you can see. So what this is a subtle tell. This is a subtle hint that there's more underlying strength to this market than if we'd have seen perhaps something that formed significantly lower down. Now, as always, it's impossible to tell whether or not that was the cycle low until we see a few more days price action. So if we get a continued move up, then we can easily say, yep, that was the cycle low right there, and look out ahead to the next 40-day cycle. If, however, on Monday, and it's a bank holiday Monday here in the UK, so I wonder if we'll have reduced liquidity and therefore one final rollover, then of course we can label this the cycle low that comes later. But I would say, given the price action, given we've got a double bottom which shows relative underlying strength, given that this low formed perfectly within the timing band, given that the swing low pattern has shown up, and given that this green candle is quite a nice strong big green push off, I have no problem going long here. So I am not currently long, but I will be looking to get long on Monday. So if we start to see immediate weakness into Monday and into Tuesday, then perhaps I will sit on the sidelines and look to see if I can be patient for a couple more days. But if we show any kind of strength out of here, and particularly if we break out this purple downward sloping resistance line, then I will be going long. I'll be posting this on Twitter, and the long will look something like this, right? The stop has to go below this cycle low here. We'll probably mark this already because I'm pretty confident that's it. So I'll be looking to get long wherever we can get long and seeing what the next 40-day cycle can give. So it will probably look something like this, I would imagine. So it'll probably look something like this. Like I said, I'm not currently long the S&P 500. I'm looking to get long on Monday. The only caveat to that would be if Monday opens up very, very, very red. But even a small amount of red, I have absolutely no problem with taking along, putting the stop below here, and then seeing what the market can give. Certainly, if we break out above this, I will call that confirmation, this downward sloping purple resistance line, I will call that confirmation of seeing a new cycle in place. And therefore, it's reasonable to expect us to trend up over the next 40-day cycle before finding that next cycle low due around the 3rd of July. One last thing before we move off of this, assuming this is the cycle low, assuming we get long on Monday and we start to see a rally and perhaps a breakout of this downward sloping purple resistance line, the important thing to realize is we have to know where we're wrong on this trade. Where are we wrong on this trade? If we come up here and then undercut this cycle low, okay? So if we come up, we rally out, we break out, and then we roll over and take out this cycle low here, that will be the exit to tell me the remainder of this 40-day cycle is going to be trending down and things are probably going to get very ugly, particularly if we lose this upward sloping red support line. So the caveat here is Camel is very bullish. Camel will be getting long on Monday and he will be seeing what the market can give over the next 40-day cycle so long as this cycle low holds. But if we push off of here, confirming that this is indeed a day 37, 38 cycle low, then the last thing we want to see is the market roll over and take out that low. That will be a failed cycle, and that will be severe technical damage. The Nasdaq, as you can see, Nasdaq doesn't look too bad, does it? So long and strong, continue to push. I think any kind of dip or pullback, if it was to occur on Monday or Tuesday, is to be bought here because we're going to see this thing resume to the upside. At least that's what the cycles are telling us. You can see the Dow Jones as well. The Dow Jones looks much more like what I was expecting to see from the S&P 500. So we had our first drive, our rally up, our second drive, which significantly undercut the first low. And then since then, we've had a swing low pattern, as you can see. Big green strong push off of here. I think the Dow is going to rally. That's the only way I can interpret this chart at the moment. Again, take out that low that we set, and that is a failed cycle. That is significant structural damage, and we don't want to be anywhere near longs. But as it stands, I think give it a couple more days to let this rally up here, and I think we can move this stop up and use this low as the new stop loss here. So expect me to do that over the coming couple of days. Here's the VIX. Look at the VIX. What more can you say? I mean, we pretty much nailed this, didn't we? We said that when we were in this neighborhood, I said if we would get a big VIX spike, then that would be really obvious in hindsight. But I said I didn't expect to see that. Then when we got pushed down here, I said, yeah, maybe we'll get a little pop up. That would make sense while we find the cycle lows that would get strongly rejected. And sure enough, it has. Now, it doesn't mean it couldn't have had a massive spike. But as it stands, as you can see, back below significant support and resistance. And now back below 18 as well. Look, we're closing in on 16. This is likely going to continue to bleed into the low teens as the stock market melts up. And then I think we'll be able to draw some kind of trend line along here. And the trade of the year, in my opinion, will be to long the VIX from the low teens all the way up to 3 figures. Why do I think 3 figures? Of course, because I am calling for the biggest deflationary bust since the Great Depression. I'm calling for 80 to 90% wiped off of the Dow. I think it's going to be absolutely horrific. And during this portion, during this crash, what we're going to see is the VIX spike well beyond the COVID peak from back here. So this trade is going to be absolutely insane. Probably going to see 3 figures on the VIX if indeed we do go full Great Depression, Great Reset, deflationary bust, like I suspect. Anyway, one day at a time. To even entertain this as an idea, we do need to see the VIX continue downwards and draw a trend line. But so far, so good. Here's Apple. So long and strong, continue to push. There's really nothing more to say about this. As you can see, still well above this blue upper sloping support line. We've got earnings that seem to be green. So as far as I can tell, no real problem with this. You can also connect all of these like this. And as you can see, we've broken out of this massive downtrend. We're only about 4 or 5% away from the all-time high. And if we can get above the all-time high, then that would open potentially a run up to around 200. So this will end up being a massive winning trade if that can happen. Of course, I have to take things one day at a time. Certainly don't want to go counting my chickens yet. Here's Nike, as you can see. So right around break even, still above this blue up open support line. Not much more to say about that. Long and strong continue to push. IPX, okay, is IPX going to break out? I think it was possibly waiting for the cycle low to be found in the US equities. This is an asset manager, by the way. So that would make sense to me. It's waiting to see that we've got a cycle low and a confirmed another uptrend in the US equities. This will be closed on Monday because it's bank holiday, but I think on Tuesday, we're likely going to see this thing break out. And if it does, then that will be a long from Camel here. So again, I've been calling this out for a while, a free trade call out, free trade signal, and expect more of these to come as and when I find them. Bitcoin, slightly less clear. Now, undeniably, this blue downward sloping support line, resistance line, is currently holding as resistance. As you can see, we have not broken out, and we certainly have not broken out and pushed off. Doesn't mean we couldn't, but given where we are in the cycles, and I've been saying this over and over again, you can see that would be perfect day 60 coming into Tuesday. We're currently on day 57. So from a cycle perspective alone, we should expect to see one final dip that undercuts these lows, or at least double bottoms, before we can move off of here. Now, will we get that or won't we? I don't know. And as I've been saying over and over again as well, we have to be prepared for both situations. If we do indeed get a sell-off, then all we have to do is treat this the same as the S&P 500. We'll just look for a double bottom or an undercut like we saw on the Dow, something like this. 2 drives, right, undercut the low, a swing low to show up, and then we can go. So that's what we'll be looking for Bitcoin. That's all I really want to see from Bitcoin, is a dip down that undercuts the lows, and then we can go long at the swing. But if it doesn't show up, we have to have a plan B, right? We don't want this thing to just start getting away from us whilst we're still waiting for an undercut that never shows. So what is plan B? Well, plan B is a true trendline break of this downward sloping blue resistance line. Get above that convincingly, and I think we'll add to positions. We'll move this arrow up to here and just call this an early cycle low. It would be a bit wonky. It wouldn't be very clean, since usually you would expect the cycle low to form below these lows rather than above. But it's not the first time I would have seen one of these patterns. They do show up occasionally. And if that's the case, then I think it'll be time to add some Ethereum exposure. If we look at Ethereum, is this breakout retest looking for that resumption? Quite possibly. Or is this just going to be a little bull trap before we get that undercut into the perfect day 60 cycle before we move off? That's to be determined, but I'm more than happy to slap a long position here, something like this, and say if we get breakout, retest and resumption, then we'll go long Ethereum. Of course, my preferred look is that we do undercut those lows, but like I said, we have to have a plan in both directions. So breakout, retest, resumption, or an undercut of the lows, swing low pattern and go. That applies for both Bitcoin and Ethereum. And then hopping into the crypto related equities, am I going to add Coinbase back? I mean, maybe, maybe not. They're certainly dealing with some legal issues, but a trendline break is a trendline break, right? If we can break above here, does this need to be a long targeting much higher up? Is this finally going to break out of this weird Wyckoff accumulation? It's not really, well, I mean, it is. It's not textbook Wyckoff, but it is certainly an accumulation and a bottom formation. Confirmation that we're starting an uptrend would be a break above this blue rectangular box I've got drawn. Maybe I'll add Coinbase back, but maybe I'd rather focus the money on things that are already trending up, such as MicroStrategy. You can see low, higher, low, higher, low, higher, low. Again, are we going to see one final dive down, right? Are we going to see one dive down, undercut that low and go? Or is this going to break out? Because I don't know the answer, of course. It doesn't matter to me. I just need to be prepared in both outcomes. So similarly for Bitcoin, if we can get a dive down and a reversal, we can buy that. And if it's going to break out, then I think we can add here and move the stop loss from here up to underneath this one as well. So that will use the profit from the first trade to finance the risk for the second trade. The same is true of Riot, isn't it? Look, Riot looks like it wants to break out. Bitcoin could certainly force this thing to dive down one last time before going. That would be my preferred look, because we'll get a lower entry price. But if this thing's going to break out, then I think we just have to respect the breakout, go long, move the stop up to probably somewhere underneath this low right here, and then we'll go again. And as you can see, Marathon already broken out. So is this leading? Are we just going to see this fly, or are we going to get a back test before we go? That, of course, is to be determined. But I do think if we do get a back test and a resumption off, then we can add there and similarly move the stop up from here to one of these swings. We'll see what the price action looks like nearer the time. So here's gold. Gold, has it just run the liquidity, the stops for the shorts above these levels? And is this rejection, or is this just a natural move getting rejected and now going to continue trending up? I've been saying over and over again, if we can do something like this in this box and break out above that, then that can be a long for me on the all-time high break. But as it stands, there's a good chance, given this price action, that we've got the top and we're likely going to break down and then break down again. So everything is on the table. I don't know what's going to happen, but certainly if we start to lose this level, then I would be much more biased towards the short side than the long side. Hold above that level and certainly hold above this level, then I think the long case is still in play in the short to medium term. But certainly if we were to lose this upward sloping blue support level, then I think it's time to go short gold. And I think what we're likely to see is a massive plunge down off of this before we can then resume to the upside. So taking it one day at a time, certainly not chasing this move at the moment. Silver looking kind of like a weird chart, isn't it? So certainly broken out above this box, retested it a bunch of times, moving higher, slight higher high. Is this going to speak to resumption to the upside? Of course, we are long in case that should happen, but I would not be surprised to see this continue to struggle to get up towards the 28s. 28 should come fairly soon, but it just hasn't moved with the velocity that these prior runs did. So anyway, open to all outcomes, but still long and strong silver and continue to push. Here are the senior miners, as you can see. Is this a double top, or are we going to blast through this? That, of course, will be determined by gold's price action over the coming week. I remain long the gold senior miners as well. So in summary, looking to try and find a Bitcoin cycle low. Hopefully I can get a dive down. If not, then we'll use that trend line break to get long and add to the positions for the crypto related equities for Bitcoin and for Ethereum. In terms of the S&P 500, I think we can safely say, or almost safely say, that we've got the double bottom and the cycle low in play. We've had the swing low, so it's probably time to get long on Monday, the S&P 500. It's also possibly time to think about adding to the NASDAQ and Dow and moving the stops up. Of course, any changes I make to any of these positions, I will notify you about. I will make a video about, and I'll try my best to post them to Twitter. And then I think it's just a case of making sure once we've got all of those positions, we know where our line in the sands are. We use those cycle lows as the invalidation point. We certainly don't want to lose those cycle lows at any point. And we're just going to try and ride the next cycle as best we can. So if you want to see all of that, if you want to continue to get updates on all of these markets in real time and how I handle them as a pro swing trader, then make sure you're subscribed, hit that notification bell. And in the meantime, enjoy your weekend. Take care from me. All the best. Cheers. Bye.